How y'all doing? Welcome back to Financially Free. So tonight I'm gonna be covering some airline stocks. I don't know about you, but I'm tired of seeing the same, 3 to 5 stocks being talked about nonstop on YouTube. I get that they're trending. I get that it gets a lot of views, and that's what people are interested in for the most part. But there's so many other investments to be made. There's so many other good trading opportunities out there. So today I'm going to be covering airline stocks, which is one of my favorite things to monitor and keep an eye on, especially for long term. It got hit so hard during COVID that I feel like the amount of growth that airline stocks have and cruise stocks have still available is just phenomenal. And I think it's an opportunity that I wouldn't feel good about at night if I let you miss out on. So let me go ahead and cover some of the airline stocks and what's the price action going on around them. All right. So first up on the list, we have Boeing. So Boeing has just been walloped starting the new year. Okay. So Boeing actually suffered its largest fall in over a year on January 5th. It went from trading about $258 at the opening day for the new year, which was January 2nd, because we were closed for New Year's federal holiday. And it barreled down all the way to $226 a share. This, in fact, was actually the largest fall for Boeing since October 2022 when it fell as much as 9.85%. The reason for the downward movement was because they had to temporarily ground their 737 MAX jet, which is what you see in the picture here, for immediate inspections after an issue faced by Alaska Air Group. The Federal Aviation Administration on Saturday ordered all Boeing 737 MAX 9 aircrafts to be grounded until they could be carefully inspected. The order applies to 171 planes around the world, and airlines, even in Turkey and Panama, have also had to ground all their flights. You might as well call Boeing Rocky because it's taking the old 1-2 punch. Okay, so Boeing is not only suffering a big reputation loss by having to ground 171 planes, but it seems like every other day they're finding something wrong with another one of the aircrafts. So if you're a short-term player in Boeing, then you've probably already lost your confidence in the company, and you've either sold out or you're thinking about selling out because you might not want to hold on to those losses for a long time and wait for a turnaround. One thing I do know for sure is that Boeing is going to continue to go down because not only is it a bad reputation for them, but they're losing money every day that those jets stay on the ground. And even worse than that, their attorney, Robert Clifford, already told CNN that they're going to most likely be responsible for paying back the airlines for taking up ground space, having their planes basically parked on the lot, so to speak. Okay. So, bad reputation, losing the confidence of those already invested in the stock. The share price is going to continue to dip. Now, where I would be interested in Boeing and have a price alert set for is around $185 a share. If I see it go that low, then I will definitely be a buyer in this stock. But make sure to do your own due diligence and create a price target for yourself. All right. So, American Airlines today on Monday, January 8th, we had American Airlines go up about 8%. But why is that? So, some YouTubers think that analyst reports do not mean jack, nada, anything to a stock or the stock price. However, it's clear that when Morgan Stanley upgraded this stock and upped their price target to $20 per share, that the market sentiment overall became a lot more bullish on American Airlines. American Airlines as well has a strong demand as well. Travel usually goes up this time of the year. Last year during January, we saw a huge pip up in price. I think we're most likely going to repeat that same price action this year. And coming into the summer months, we usually come in pretty hot as well on American Airlines. So American Airlines is a stock that I'm personally invested in. I just think it's such an easy long-term hold and sell. It's a constant. I do it the same pretty much every year. The last 3 years or so, every time that it goes to about 1250, my alert goes off on my brokerage. Anything 1250 and lower, I gobble up shares. I make my position larger, and then usually around January, March, or July, and or August, because August is typically the biggest travel month of the year, and that's when you see prices for cruise lines and airlines typically go up the most. There's some other factors, obviously, that affect prices, but it's one of those cyclical type of stocks. So, I get it under $12.50 a share, and I usually sell it at 18, 19, whatever I'm comfortable with. Sometimes I'll let it roll over into the new year and just add my position size as I go. But it's always a really safe, easy play. If you have the extra money to allocate funds into American Airlines, I would highly suggest it. So if you look at JetBlue's stock price as of January 8th, it's trading pretty cheap right now compared to all the other airlines. And you might be kind of scratching your head, well, why would I want to invest in this? It almost looks like it's on the verge of bankruptcy. Well, still at the end of the day, JetBlue is the number 6 world's largest airline. And there's also a trial going on to have JetBlue merge with Spirit, which is the 7th largest airline, to merge. And, that would ultimately result in higher prices and fewer flights once lower cost Spirit was no longer competing. So JetBlue expects to raise fares about 30% with this. So there's currently a trial going on. It's going to be really, really interesting to see how this pans out. So stay tuned for that. We'll make sure to cover it here on this channel. So one thing I find really fascinating about the JetBlue and Spirit airline merger in court is that the big issue is that they'll control too much of the market. They'll be able to raise rates so exponentially high on their airlines and stuff like that. But currently, Delta, United Airlines, American Airlines, and Southwest control 80% of the market. So obviously, there's already monopolies in place. I don't see why the merger wouldn't be allowed to happen with JetBlue and Spirit being the 6th and 7th. It just kind of makes sense that they merge together. They're so close already. This could bring a lot of positive price action to this stock. I think it could be an easy double up play. I do think a lot of where the current price sits at, which is about $5.80 a share today, I think a lot of that is already factored in, because if you look about a year ago or longer, this was trading at about $3.50 a share. So obviously, Wall Street, I think, has already priced in the idea that this merger will be successful. But if it's not, all those trying to predict the future investments, so to speak, are going to be washed away, and it might come barreling back down in the fours. So just be aware of that there is a lot of risk associated with this play, because its success really is depending on if this merger is successful or not. So I'm already a position holder in JetBlue, and my average is about $5.20 a share, because for me, investing in this stock is worth it, because I do believe that the merger will get approved. I think it's going to be a battle in court, but I think that it will go through, and I think this is going to be a nice double up play. If you guys enjoyed this video and you want to hear more about other stocks that are not covered on YouTube very often, please like this video, share it with your friends and family, and subscribe. Thank you and have a good night. Thank you so much again for subscribing to Financially Free. If there's any stocks that you want me to cover, please let me know down in the comments below, because I'd be more than happy to do so.